Hey, what's up? Welcome to DGen That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Tilray Brands, ticker symbol TLRY. And so here I am recording this on Monday, October 7th in the evening after the market has closed and Tilray closed at a price of $1.65, being down a little over 2.33% on the day, but bouncing about 1 penny in the after hours. So maybe there's something there. And so yeah, in this video, this is really just a series where I'm going over the Tilray chart and then looking into the unusual whales options data to see if Tilray is going to be going up. And so this is really just to track a fairly small trade that I am participating in, involving some calls and a handful of shares right before earnings on the 10th, really just with the thesis that this does potentially look like it could be breaking out to the upside. However, it could also be breaking to the downside. I'm actually feeling a little more convinced that is what's going to be happening, but maybe we are starting to feel a little faked out, or I am starting to feel a little less confident in the trade. But still, I'm in it. I got a stop loss placed. And so I am really looking forward to seeing what happens on earnings, which is on the 10th, pre-market on Thursday. And so, yeah, I'm hoping that this really launches and gets going towards around $2 a share. But before I get into like the options data and stuff, I just want to go over a few things on the chart. I have in previous videos gone over these two purple lines, so I'm not going to go over them in this video. But we did for the first time close below the dashed purple line. And so that doesn't look so great, but it could look worse. One thing that would look worse is if we closed lower than the low that we hit on the second, which was at a price of $1.65. So we did close exactly at that price. But again, it's not necessarily ideal. It would have been better if we closed at like 166. It would have been a little bit better, but it is what it is. But looking at this low over here at 162, we have put in a higher low. We are still maintaining this prior low here. So I do think that is good. We are also not below the purple solid line. So I do think that is good as well. Before the but, this candle potentially, is similar to this candle. Maybe we see a bounce, a green day tomorrow. And so on this day, it was down about a little over 3.5%, whereas today down a little less than 2.5%. And then the following day, it was up about 5%. So it would be great if we saw an update tomorrow of about 5%. But really, I don't think it really matters. We're really just waiting for earnings to come out. And so some things that do stand out in the chart that have me a little bit concerned is really the MACD in that, it's been kind of flat here. I was hoping it would turn around and start to be green. We did have a little bit of hope in that last week with it going up on Thursday to a high of, let's see, $1.77, but then, it did pull back. So that wasn't so great. And then with the MACD, we see it, kind of flat here, a little bit red, but, effectively being zero. But then today for Monday the 7th, it definitely looks like it's starting to get more negative now. The histogram value that you can see right here for the day is negative 0.0038. So it's not super negative, but it does seem like it is trending negative. And so with it trending negative, we could be seeing price go lower. But since it's not like, super picking up in the negative, this could fairly easily flip to the green side and go up. And so again, that is what I'm hoping. If we do look at the RSI, that is at 40.69. So getting towards 30, which is this orange dotted line that you can see there. And so 30 is getting into oversold territory. And that is typically when we would see a bottom start to form with this turning around, the RSI turning around. We are not seeing that. But one thing that I guess stands out, I'm not the best at reading volume, but the volume does look fairly flat relative to Friday. So Friday, the volume was 23.26 million shares traded, whereas today it was, on Monday, it was 22.5 million shares. So it's gone down a tiny bit. And so that kind of makes me feel like maybe there's some hope there that this is, there's not too much volume pushing this lower. So maybe we do see a surge in volume and then to push it to the upside. So I think there's a little bit of hope there. But, we've only seen one close below this purple dashed line. And so a more convincing break would be a close lower than today's low, which we did close at. Again, that's not such a great thing that we closed at the low. But, that's what happened over here. We closed at the low of 162, and then we started to see a reversal. So maybe we start to see that, and then getting into earnings, we see a breakout from this downtrend. So that is what I am hoping. But, I mentioned that I am participating in this trade. I'm only risking $100, and I got a stop loss, and that stop loss is at $1.60, being a couple pennies below this low. So really my thesis is that we're not going to test this low. If we do, maybe we go a little bit below it, but hopefully not much, because I'll be stopped out, which I just have 10 shares and then 6 call contracts that expire in November. I'll share those at the end of the video. But yeah, I haven't lost hope. I haven't lost faith in this, but I am prepared for that stop loss to be hit. Maybe it'll be hit tomorrow. We're only 5 cents away from it. So, we'll have to see. But, let's get into the fun stuff of this video, which is the unusual whales options data. So I'm really excited about this. This kind of series tracking Tilray is really just for me to get more practice looking at this data and to just be following up every day looking at it, because I think that's really the best way to be trading this kind of stuff. And so here, looking at this, what we're looking at is the options volume, and this is call and put volume for one day. That is today, October 7th, and each candle represents 5 minutes for the trading. And so what we can see is for the day, we saw a volume of just under 40,000 contracts traded, which represented a premium of about $466,000, almost $467,000. So that's a good amount of money, almost $500,000. And the net premium traded for the day was an increase of $83,580,000. And then what we can see over here is the put and call data for the day. So we can see that there's about, less than 3,000 puts traded today, whereas calls we saw over 36,000, so a lot more on the call side than the put side. As you can see in this chart, there is a lot more green, so that does make sense. And then the yellow is the underlying stock, so we did see that price came down over the course of the day and actually closed at 165, which is, right behind my little screen, so like right here, 165, but it shows it at 166. It's just a line chart, so it's not as precise as the candles and stuff for the price. But anyways, if we look at the premium traded for the day in puts, that was less than $33,000, whereas the calls we saw premium traded of $434,000, so a lot more on the call side. And if I do scroll down a little bit, we can see that the majority of the contracts traded were on the bullish side. As you can see here, about 56% were on the bullish side, meaning they were on the ask side or they were being bought. Calls were being bought, accumulated before earnings. And then on the bearish side, it is less than 56%, less than 50%. So I think that, is good that we're seeing this look bullish. And then if I do scroll down, we can see the hottest contracts by volume here. And let's see. From these, we can see, some stuff that's expiring this Friday, so it's kind of a gamble. $2 call. What we can see, though, from this is that the majority were on the bid side, so people selling those contracts. Price is notably lower than $2 a share. And, earnings is coming up, so this is definitely a risky contract to be holding. We also have the contract $2 strike for a call that expires the following Friday. That's the monthly contract expiration for October on the 18th. Again, majority on the bearish side. So on the bid side, selling those calls. So not really looking so great there. But then if we do look a little bit further, actually a lot further out, we can see the $3 strike for calls expiring on January 16th of 2026. So more than a year from now, 465 days from now, majority on the ask side or the buying of these contracts. So that is good, but that's way into the future. Something that may be good, especially with price not being so far from $1.50. These are puts with Friday expiration coming up on the 11th, so just after earnings. And so these are puts and majority on the bid side. So people are getting rid of these contracts. They're saying they don't think it's worth the risk to think that Tilray might be going down to $1.50. They either think it's going to be going up or they just don't want to be risking it. And so a lot of contracts being sold there as far as, so we can see the volume traded with the majority being on the bid side relative to open interest of 2,600. So about 2,000 or so, 80% of 2,000 being sold. So there's going to be 600 to 800 or so of these contracts, probably 800 of the contracts being held tomorrow, puts. So that does make me feel a little bit more confident. And then getting down here, $2.50 for this coming Friday, majority on the bullish side, $2. This is my contract, so I'm excited about that. 90% on the bullish side, and that represents 17,756 contracts being open with an additional 1,400 going into that. So that is looking good. So I'm excited about that. And then if we look at these are the hottest open interest contracts. So this one, interesting, $7 call, very out of the money, that expires this coming January 17th, 101 days from now, 100% on the ask side. Open interest was 61,000, and now there's an additional 846 in there. This one is a $2 strike that is, also expiring January 17th of 2025, 78% bullish side. And then here, this one's on the bid side, so more bearish, selling calls with the $2.50 strike, expiring again January 17th. So that's not looking so great. But then we also have this $4 call, January 17th expiration, 100% on the ask side. So that's looking better. Put here 100% on the bid side. So that's bullish. So that I think is good. So yeah, I mean, it's really kind of mixed. I would say that is kind of what I'm taking from this. Short term, long term, kind of, I would say longer term, it's more bullish. Shorter term, it's kind of mixed, it seems, to me at least. And then here, I'm not as familiar with looking at this because it's not for a specific contract. This is historical Tilray data. And so I think rather than looking at this, I will look at the specific contract that I'm holding, and I will also look at this data with a different view, looking at the 7-day time frame. So we can see there have been some pretty nice spikes in calls in the past. Not really seeing too much volume relative to these big spikes, which is not really too surprising since earnings is coming up in just a few days. So that is not too surprising. And I can also look at the net premium, and we can see that call premium does look like it's gone up a little bit over the course of today, but not, much relative to this. So this, I believe these are all relative numbers. So this call premium, you can see net call premium there. This went up to, let's see, over $1 million. And then it's kind of come down from that 1 million. Let's see, come down 373,000. Sorry, 373,000. Yeah, I'm looking at the numbers up here. I have to have the cursor over here to point them out. But then, yeah, I mean, so it came down, but that's just like a third from up. Let's see. Yeah, a third down here if we're thinking about it relative to up here. And then it's gone up a little bit. So it's still, the call premium is still pretty elevated, I would say, if I am reading that right. And then I am just going to switch back to the options volume again here. Switch this over to the 30-minute candles. I just think it looks a little bit cleaner. And, for this, I just wanted to look at the premium traded over here for the day. Again, less than 500,000. But if we look at the calls premium traded here, over $5 million, 5.43 million. So that's a lot, and that's 10 times, more than 10 times the premium in calls traded. But I'm not sure that means that those contracts are being held. This is all of the data. I do believe that means that this is the premium in contracts that have been traded, so not necessarily held. So I think we should take that number with a grain of salt. It's a large number, almost 5 million. But yeah, and so anyways, with this, I'm just going to stop rambling about that, and I'm going to dive into the contract that I hold, which is the $2 strike call for Tilray with the expiration of November 15th. So I've got over a month, and that is the monthly contract for November. And so what we can look at for this is there was, you can see just more green candles today than red, more green, even though, the premium was more or less flat, ranged from about 9 cents up to around, let's see, we can actually see down here, the range, the low was 9 cents, the high was 12 cents. Nothing too exciting really there. But if we look at the data up here for this specific contract for the date of October 7th, volume traded 1,458 contracts. And let's see, I'll get into actually some of this data down below. And so I'll scroll down to that. We can compare it with the previous days. But then looking at these numbers here, we can see that the bid volume was 141,000 contracts, whereas the ask volume, people buying this more, is almost 10 times. It's 1,307. So that makes me feel pretty good, although, the premium traded today, 16,000. One YOLO, as far as Wall Street Bets defines it, is $10,000. So this is like one Wall Street better and a half. Going in on this. So it's, not a crazy amount of money, but this is not the most popular contract. And so the reason why I'm interested in this is because I think $2 is totally a reasonable target. Just looking at the chart and, with the gap up here, I think $2 is totally feasible. If we do break out to the upside, we could, though, break to the downside. So it is risky, but that's also why I don't have an expiration within the span of a month. I have a little bit more than that. And that is the monthly contract, so I think there's just going to be more volume traded on it. So more likely for me to exit, my position if I want to get out of it. And yeah, here, this is like the same kind of graph that I showed over here, the net premium graph. If I switch this over to the one-day chart, this is the exact same as it over here. So that does show that, as price was coming down, the premium of calls was going up. So I think that is good that people are, driving this premium up, betting on it. As far as I understand, although the volume here does look bearish and red, but I'm still, kind of learning how to read that. And so looking at this, let's see, I'm probably just going to scroll down and look at kind of the changes in the open interest and whatnot. And when I scroll, I think I need to just scroll it over here. Yeah. Otherwise I get, let's see. I want to do this so I have the data still up here if I want to compare it, and then I have this down here. And so for today, as I'd mentioned, volume traded for this contract is about 1,400, and the open interest is about 17,000. Almost 18,000. It has been going up the past couple days. And so with the volume traded today and the majority of that being on the ask side, 90% of it, so we can actually do the math on that. I'm just going to pull up the calculator app here, just 1 second. All right, so I'm just going to do the math here. And so we can see that the volume traded is 1458. And so I'm just going to multiply that by 90%, and that's 1312 contracts. And so I can add that to the, let's see, is that correct though? Because then there's a portion that are sold. So what I want to do, let's see, because these are the ones that are added. So 1312, I'll remember 1312. So this is added to the, let's see, 1312. Okay, yeah, I'm going to clear that. And then I'm going to do 1458 minus 1312. And so there's 146. So I clear it again. 146. So 1312 minus 146. And so that's going to be the net. So you've got the ones that are bought are on the ask side. And then the remainder of that, we're going to assume those are all sells. And so from this volume of 1,458, we're going to get a net increase because some of those are removing from the total open interest. So 11,166 plus, let's see, 17,756. And so that is going to be the amount of open interest tomorrow. I might be mistaken on that. I probably am, rounding errors and just, assumptions, whatnot. But yeah, getting close to 19,000 contracts. So this is going up before earnings. So that gives me some confidence. We've also seen the ask side being majority on the ask side for this contracts, even when they went down, when the open interest went down over these days, we did see more on the ask side than the sell side. So I think that is good. Actually, well, for this, so these numbers are from the previous day. So it's like, let's see, for this day on the 1st, there are this many contracts that were open, this many were traded, and then it ends up going down by 112. And so that's because it was about 50-50 a bid in the ask, and then it ends up being the majority of those were sold. So the number of open interest goes down, and then here 49% on the ask side, it then goes down again, so not too surprising. But then as it goes up, as its majority, 65% on the ask side, we start to see the numbers over here, the open interest start going up. So I think that looks good with 90%. I'm feeling better about this, but this could also be gambling, because if we do look at the, let's see, I'm going to try to expand table. Okay, so let's see, I'm just going to try to scroll on the side here. So we can look at the total premium traded. This is, 21,000 on Friday, almost 22,000 on Friday, 16,000 today. And so, yeah, I mean, that's a lot, and that's more on the ask side, but it's a few degens from Wall Street bets, so it's not like millions of dollars, so it's not exceptional. This money could easily be lost. But then if I do come up here and we do look at, let's see, I think we can see, let's see, the amount of premium. This is just for the day. And let's say implied volatility. I'm not too familiar with looking at that. I'm just going to switch this over to 7 days. We can see, yeah, I mean, as far as the amount that is being held in premium for this specific contract. I could probably, this is the premium that's traded. So what is held, I'm not really sure. But if we see, I mean, I guess, I could do the math on, well, actually, I don't know, because a lot of this data is, specific to the day versus multiple days. But yeah, I mean, I'm feeling I'm fine if it goes up. I'm fine if it goes down. But I want it to go up, and I think that there's still a chance that it can. And so, just like coming back to looking at this chart, I think that especially because we're still putting in higher lows, and I don't necessarily think we should count this one at $1.50. It's just really like the MACD and the RSI have me a little bit concerned. Tomorrow's trading will make me feel much more confident if we do get a close back above this purple dash line. But if we don't, we start to go lower. Maybe I get stopped out at $1.60. That's not a big deal. And so on the note of me potentially getting stopped out, I'm just going to pull up my handy little spreadsheet. I did add one contract today, and I should note these times and the times that I have shown in Unusual Whales are Central Time, Midwest Time, because that's where I'm located. And so what we can see from this screenshot is that I did buy one contract today. It's a 10-cent premium, so that's $10.05 after my fee. And so I have 6 contracts in total. I have $65 on the table there for calls, and then I have 10 shares that I bought at $1.69, risking about $17 there. And the main reason why I got those shares is because I wanted to have a stop loss at 160. And then if that does get triggered, I sell these shares. I lose 90 cents, not a big deal. And then that lets me know, okay, I should be a little bit more cautious with these calls. If that does get triggered, I will have to decide on my feet. I'm at work tomorrow, so if it does get triggered tomorrow, I might be a little delayed, but I would probably sell half of these contracts at a loss, just to kind of buffer myself if in case this does like gap down to 150 or lower than that even. I just don't want to be holding the bag if there's like no chance in recovery. And then I just hold the remaining 3 until, potentially a few weeks after earnings, but I'd probably sell them before expiration, which is November 15th. And so that's just like this trade, me tracking this every day is really just me trying to get better at, managing risk with a stop loss, accumulating contracts, not being too risky, risking less than $100. And so here, I'm going to pull up the calculator app again. And so what I can do here, I'm just going to pull this up so you guys see the whole calculator. So, I've got $65.30 in calls right now, plus $16.90 in those shares. So right now I'm currently risking $82 with that stop loss. I'm not going to lose all of it. I'll at least have about 16 bucks in the end. So not a big deal. I'm not risking thousands of dollars because this is really just to help me get better at managing emotions around contracts. I'm just doing it small because I'm not too familiar with contracts around earnings. Definitely gambling. I should have noted that at the beginning of this. Very risky what I'm doing. But again, I'm not risking a lot of money. But I do have 2 buys remaining that I suspect one will get filled tomorrow, possibly both of them. One is for 9 cents. And actually, I should have, let's see, I'm going to enter that, and then I'm going to add that 9 cents back. Dang it, I screwed this up. Oh, sorry, this is embarrassing. Okay, so 65.30 plus 16.90 is what I have risking on the table. And so I get another contract at 9 cents, which translates to a 9-cent premium, which translates to $9.05 after the fee. And then I have another, what the hell? I'm screwing this up. I'm sorry. 65.30 plus 16.90, and then that's plus 9.05. and then plus 805. And so I will risk no more than, $100, $99.30 apparently. And so I'm not going to place another buy at 10 cents. I've bought 3 contracts at 10 cents. I'll buy another one at 9. I'll buy another one at 8, and then that is it, and just wait to see how this plays around earnings. And I should note, this is not for a long-term hold for me. This is just a swing, getting more familiar with following up, looking at the daily charts of the stock, as well as unusual whales. And before I do close this video, I don't typically do this, but I might as well just look at like the 10-minute chart to see how this kind of traded throughout the day. So yeah, I mean, it's just like kind of like barcoding down. So not really too exciting. I think that's just because we're waiting for earnings. This is the hourly time frame. So yeah, I mean, I hope that this goes higher. And if it doesn't, I'm managing risk. I hope that the way that I'm managing risk is a good example. But really, a lot of what this channel is just like documenting trades for myself, documenting patterns that I see, following through with them, and like doing a daily follow-up is really helpful for me in assessing whether or not I do this well or poorly. And so I'm hoping that it goes to the upside, but it could very well come to the downside around earnings, and that's why I got that stop loss, risk management, and then so, on to the next trade if that is the case. But speaking of on to the next trade, I am going to wind this video down. Thank you so much for watching, and those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more content like this. Thanks a lot for watching. I look forward to the next update tomorrow. Take care, you guys.